Alright, let's talk about Novo Nordisk. The stock has taken a massive 43% hit year to date. What's behind the drop? Well, it's mainly due to the fierce competition from Eli Lilly, which recently slashed the price of diabetes drugs Mounjaro by 60%. On top of that, there's a new competitor in Denmark, Zealand Pharma, which is further pressuring Novo Nordisk's market position. Finally, you have Trump explicitly talking about decreasing drug prices for obesity drugs in the United States. Given North America is Novo Nordisk's biggest market, it felt the pain. But now here's the big question. Is the stock decline justified, or is this market overreacting? Today, I'll break down the valuation of Novo Nordisk using a discounted cash flow method and a relative valuation. Let's find out if this dip presents a buying opportunity or if there's more downside to come. Hi everyone, and welcome back to the 50 or Nothing channel. If you're new here, I analyze stocks using deep fundamental valuation methods to help investors make smarter decisions. You need to be a bit autistic to love my content, because what we do is we do deep dives. If you're a trader and you use technical analysis, I don't believe this is the right forum for you. But you're more than welcome to view my video. Today we're diving into Novo Nordisk, one of the giants in the pharmaceutical industry, currently facing strong headwinds from increased competition. The question is Novo Nordisk undervalued right now, or are we looking at a value trap? Let's break it all down. Before we jump into the valuation, as always, let's quickly go over what Novo Nordisk does and why it's been a market leader. Novo Nordisk specializes in diabetes care, obesity care, and other chronic diseases, with its most famous product line being Ozempic and Wegovy. The company has been growing steadily thanks to its strong pipeline and its successful marketing strategies. However, recent competitive pressures, especially from Eli Lilly, Mounjaro, and Zealand Pharma's new developments, have raised concerns about Novo Nordisk's ability to maintain its growth trajectory. So the real question is whether the company's valuation can still be justified despite these new challenges. Now, to the left, we have Novo Nordisk revenue broken down in product segments, and we can clearly see here that the diabetes care stands for more than 50% of the total revenue, followed by obesity, and then you have the smallest portion, which relates to rare diseases. Now, to the right, we could see the geographical breakdown for Novo Nordisk, and here we could clearly see that North America is the largest market for Novo Nordisk, followed by Europe and Middle East. Now, of course, when Trump mentioned about slashing drug prices for obesity drugs, the market reacted by punishing Novo Nordisk stock price. It's like the market anticipates in the future that the profit margin of Novo Nordisk, which is around 50% EBIT, won't last. It will decrease down as competition increases, and of course you have the government risk with Trump saying that they want to slash drug prices. And if we look at the growth opportunities historically for Novo Nordisk, we can see that diabetes care grew by 14.8% on an annual basis between 2019 and 2024. And there were around 537 million people living with diabetes. But if you look at the obesity care, here we can see that it grew much faster at 146% on an annual basis. And the market is even bigger. Here we have 813 people living with obesity. And the driver is, of course, the obesity story for Novo Nordisk. And when Eli Lilly came out with their competitive product, Mounjaro, and now you also had Zealand Pharma in Denmark coming up as a competitor as well, that, of course, now we understand why it pressured Novo Nordisk's stock price, because the obesity market is Novo Nordisk's biggest opportunity. And if we look to the right, we can see rare diseases, which only grew by 4.5%. By looking at the growth opportunities for Novo Nordisk, I can clearly confirm that the obesity care is what is driving the valuation of Novo Nordisk. And the obesity market is expected to grow by 20% annually until 2035. Now, looking at the rare diseases for Novo Nordisk only has 4% rare disease of the total revenue. So no one cares if a new competitor tomorrow comes up with a new rare disease drug. It will have a quite small impact of Novo Nordisk's stock price. However, given that the obesity care is such a big market and an opportunity for Novo Nordisk, whenever we see competitors like Eli Lilly or Zealand Pharma in Denmark, it will impact Novo Nordisk's stock price. Over to the ownership structure of Novo Nordisk. Now, you're probably wondering in this stage, why is it important to go over the ownership structure given we're valuing a company? It shouldn't have any impact. Well, I'm going to give you the answer quite soon. If we just go over the ownership structure and we see that there's two classes of shares. There's Class A shares and there are Class B shares. Now, the Class A shares stand for 28% of the total share count, whereas Class B shares stand for 71% of the total share count. So we can say that the majority of the shares are B shares. And you would probably think that if you would buy all of the B shares, which is the majority, you would be able to dictate in Novo Nordisk and decide what the company should do. But the answer is no, because the Class A shares have more voting power than the Class B shares. And even though the foundation only owns 28% of the total share count, they have the majority votes, 77.3%. So this is not a democracy, it's a dictatorship. The foundation has the final word. And why it's important to understand the ownership structure when you own shares in a company is that you want to know, is there any possibility that Novo Nordisk will be acquired in the future by another company, which is good for us retail investors, right? But given this ownership structure, no one will be able to acquire Novo Nordisk because the foundation holds the total votes. That's the downside. The second downside is that, for example, you have activist investors such as, Bill Ackman, probably heard of him. He goes in and when he sees that a company is not efficient, the activist investor will go buy a big stake in that company. And they will then impose changes to improve the efficiency of the company, which will then profit the retail investors and not the management. However, given this ownership structure, an active investor won't be able to take power and won't be able to impose the changes needed for the company. If in future the foundation, for some reason, would neglect Novo Nordisk or take decisions that doesn't profit the company. Important thing to understand that if you buy shares in Novo Nordisk, you will be sitting in the passenger seat and not in the driver's seat. Now over to the industry data. Because when we're going to value Novo Nordisk, we need to understand how it compares to competitors and its peers. What I've done here is I've gathered 133 companies which specializes in diabetes and obesity care. And to the left, how we're going to interpret this diagram is that MIN stands for minimum. So the company with the lowest gross margin, in this case, of the 133 companies had minus 229%. Quartile 1 means 25% of the 133 companies had a gross margin of 37%. And the median is 0 to 50% of the 133 companies had a gross margin between minus 229 to 53%. Quartile 3 means 0 to 75% of the 133 companies had between minus 229 and 67%. And of course, max means the company with the highest gross margin out of the 133 companies had a gross margin of 100%. Now, this probably is a small company and don't have any operations currently, so I would take that with a pinch of salt. The mean is the average, but sometimes the data is skewed, so I would rather pick the median. And here at the bottom, you have Novo Nordisk. So now we can compare Novo Nordisk with the peers and the competitors. So we could say that Novo Nordisk stands out here, right? Because they have a gross margin of 85%. It's higher than the median, and it's even higher than the quartile 3. So the top 25% of the companies with the highest gross margin had 67%. Here, Novo Nordisk had 85%. If we look at the operating margin, which is an abbreviation for EBIT, Novo Nordisk had 48%, even higher than the top 25 companies. Return on invested capital, Novo Nordisk, same thing, same story here, had higher than the quartile 3. Same thing for return on equity. So we can clearly confirm that Novo Nordisk is a special company in this industry. That is why it's important to always go in and compare it to the peers. Before we jump into the valuation, I just want to say that this is a disclaimer that stock valuation, analysis, and opinions presented in this content are for informational and educational purposes only. Always risk in investing in stocks. Stock prices could go up and they could go down compared to my intrinsic valuation. So just bear that in mind before we proceed. So for me to value Novo Nordisk, I need to project the revenue growth from now on and to year 10 and in perpetuity. Now here in the middle, we have the revenues of Novo Nordisk, the current ones. So they have a revenue of 290 billion, and this is in Danish. So where diabetes stands for 71% of the revenue, obesity 22%, and rare disease 6%. I said that rare disease stood for only 3% in my previous analysis. I was wrong. It's 6%, but it's still a small figure comparison to diabetes and obesity. And here is the market share. So of diabetes, currently Novo Nordisk holds 33.8% in market share. And in obesity, it is the biggest player, 64% in market share. And it's a duopoly between Novo Nordisk and Eli Lilly. And of course, the smallest portion here, we have rare disease, where Novo Nordisk has around 19% market share. Now, what we're going to do is we're going to project revenues for Novo Nordisk year 10, so 2035. And again, this, I don't have a crystal ball. So what I'm doing here, I'm just projecting and trying to be realistic. So with diabetes care, I'm saying that in 2035, that the market share for Novo Nordisk will jump. It will grow higher, 33.8%. It will capture 35%. And the total market value of diabetes will be 1,213,000,000 Danish, because it's growing at an annual compounded growth rate, 7.1% annually. Now, if we look at obesity, here's where I said that the obesity market is the factor that is driving the valuation of Novo Nordisk. And we can see that the obesity market will grow 21% annually, and it will be worth 716 billion in 2035. And currently, the market share for Novo Nordisk is 64%, but I don't believe they will be able to hold that, because now you have Lilly, you have Zealand Pharma, and you will probably have new competitors in this environment that will compete for the same customers. So I believe that the market share for Novo Nordisk will drop to 45%. And it will be a duopoly, I believe, mainly between Eli Lilly and Novo Nordisk. Jumping to rare disease, it's a market that is not growing as fast as diabetes and obesity. It's only growing at 3%. And the market value of the rare disease will be 129 billion Danish. And I believe that Novo Nordisk will capture 25%. Now, probably here in the obesity, I'm being maybe a bit too optimistic, but same thing, I'm not saying that it will capture half of the market, because we're gonna have more competitors. So I'm keeping that at 45%. We have now made assumptions for revenue. Now, the next step to do the valuation, we need to do assumptions about the profitability of Novo Nordisk. Now, before we jump into the profitability, we need to understand the corporate life cycle. So let's just dive into that, and then we're gonna look at the profitability. So the corporate life cycle is the lifespan of a company. In the green line, you see the revenue growth, and then in the red line, it's the earnings. Of course, when a young company, you would have high growth in revenue because, first of all, you probably have small revenues. So to grow from 100 million to 200 million, that won't be so difficult. You could have 100% revenue growth. However, though, when you become a mature company here, if you have a revenue of 1 billion, it will be difficult to grow by 100% to make it to 2 billion, because mathematically, the higher revenue you have, the harder it will be to sustain high growth. So we could just, agree upon that more mature the company gets, the more difficult it will be to sustain high growth. And if we look at earnings, we could see that companies that are young, startup companies, will have, will probably lose money because they don't have the cash flow and they're investing in growth. But then once they become mature, then we'll be able to convert that growth focus into more profitability, and then earnings will increase. But then once the company becomes mature, the earnings will start to decline. And the reason is that competition will increase. Look at, young tech companies. You have, for instance, Apple. Apple is the dominant player in the phone industry, cell phone. But now you have other competitors popping up, and I don't think that Apple will be able to maintain their earnings now and compare that to 10 years ahead, because due to competition. So we need to bear this in mind now when we assume profitability for Novo Nordisk, because I would say they are a high growth firm currently in this diagram here, and they will start soon to move to mature. And once they do that, then of course competition will increase. So their 50% operating margin won't be 50% 10 years from now. As we are going to project what the operating margin for Novo Nordisk will be 10 years from now, we need to look at the mature firms. So what I've done here is I've picked the biggest pharmaceutical companies within diabetes and obesity care in the world. And we could see here that the company Johnson & Johnson, and this is in millions in USD, they have $88 billion in revenue, followed by Roche Holding, 68 billion, and then you had Merck & Company, 64, and Sanofi, 45 billion. So all of these four companies are much larger than Novo Nordisk. And you can see here in the middle, I have listed the profit margins. And you can see that none of them have as high profit margins as Novo Nordisk, because these are mature firms where the competition for their products have increased. And that's why I'm going to assume that Novo Nordisk in year 10 will have profit margin similar to Johnson & Johnson of 25%. So that's the power of analyzing mature firms when you're going to project the operating margin. We have now made assumptions for revenue and for operating margins. And now we can value the company. So let's start with revenue. The current year for 2024, for Novo Nordisk, they had a revenue of 290 billion. I expect that it will grow by 18.5% next year. And then thereafter, it will grow by 13% annually, 5 years going forward. And then it will decrease down to the risk-free rate of 2.8%, which is equivalent to the Danish risk-free rate. Why that is because you can't grow faster than the economy in eternity. So it's important to have some boundaries in your valuation, because if you still have higher growth rate in year 10, then you're saying that everyone in the entire world will use Novo Nordisk products, and which is unrealistic. Moving on to operating margin, we currently Novo Nordisk has an operating margin of 49%. But as I said before, the competition is increasing, and once the company becomes mature, it will have an operating margin similar to Johnson & Johnson, which we saw in the previous slide, of 25%. And here is the revenues. The year 10, they will have a revenue of 781 billion. And again, where I got that from was my estimates here. So if you sum up rare disease, obesity, diabetes, you get a revenue of 780 billion. And that is why you see that here as well. Then you multiply that by the operating margin, you get the EBIT. But we're not done yet, because for Novo Nordisk to grow, they need to reinvest some of their profits back in their business to grow. And they need to invest that in property, plant, and equipment. And that is what I've done. I deducted for reinvestment. I get the free cash flow. And the free cash flow gets discounted back at the cost of capital, 6% in this case. And then I get the present value. So I get the present value of 2,400 billion Danish kroner. And this is what is also referred to as the enterprise value. But for me to go down to equity value, or what you refer to as stock value, I need to deduct for debt, which is 102 billion in their latest balance sheet. I add back the cash they have in their bank account, 26 billion Danish. I get an equity value of 2.3 billion. 2,300 billion Danish. A lot of numbers here, so easy to mix that up. Then I divide by the share count. And it's important here to understand that when you divide by the share count, you also need to consider restricted stock units. And you're probably wondering, what is restricted stock units? So these are shares that are not vested yet, but they are given to employees or management in the firm as bonuses. And once these restricted stock units gets vested, then they become common shares, and that will increase the share count. So that's why it's really important that you include those restricted stock units with the common shares that you see. I get then a value of 521 Danish, and the stock is currently trading at 530 Danish. But there is something you need to understand with pharmaceutical firms, which is quite unique. Now, I have this valuation of 521 Danish kroner, right? And I'm probably going to say, hey, it's overvalued because it's currently trading at 530. But there is something called, referred to as the option value. And in the pharmaceutical industry, once they want to develop a product, they have to go through different phases. So they have phase one, and once that gets passed, they go to phase two. And once that gets passed, it goes to phase three. And once that gets passed, the product is then, the drug is able to be commercialized and sold to the public. And due to these three phases, it's because of safety reasons, right? So Novo Nordisk doesn't just develop a drug and sell it the day after and kills a lot of people. So they need to go through these three phases. And in my valuation, I have not included these drugs that are not commercialized yet. So they have this pipeline where a lot of these drugs that Novo Nordisk has are in phase one or phase two and phase three, and has not yet given the approval to be sold to the public. So it's not included in my valuation. And I could value those, but then I would need the details of what these products cost to develop. And then I could do a valuation of these. But I don't see that in their financial statement. So that's why I say, when you have this valuation of 521 Danish, there's an option value, and the option values are the drugs that are not commercialized yet, that get on top of my valuation. So I would say that my value of 521 Danish is quite conservative. In addition, you have more option value. I've read that some of the obesity drugs and diabetes drugs could cure Alzheimer's. And if that comes into fruition, then that's a plus to my valuation. Also, I've read that some of the drugs for obesity and diabetes could cure heart diseases. Also, if that comes into fruition, it could be added to my valuation. So, important to understand, when you value pharmaceutical firms, you need to keep in mind the option value. And that is why whenever I have an intrinsic value that is equates to the stock price, and normally I'll say, hey, there's no upside because the stock price is trading at the valuation of mine. But I'm going to think of the option value that comes in mind. We have now finalized the discounted cash flow valuation. But what we can also do, and what I always do, is a relative valuation. And what that is you don't value an asset depending on the cash flow that is received from that asset. What you instead do is that you look at comparable assets and then you price your assets. So this is not a valuation, it's just looking at comparable assets. And the best example is when you buy or sell a home, you go to a real estate agent, and they will tell you that your house is valued depending on what your neighbor sold his or her house for. And they will get a square meter, and then they will tell you the value of your house. But they won't look at your rental income, which is the cash flow. So it's important to just understand the relative valuation is not valuation from cash flow perspective. It's more looking at comparable assets. Whereas discounted cash flow, there you look at cash flows. Here we have the diagram, and I won't go through what the left means because I've explained that before. But here I have 133 firms, and the median PE value for these 133 firms stands at 19.8, whereas Novo Nordisk has 24.6. And the highest company in that had 248. And I remember looking at Eli Lilly, it was well above 100. And we have the price to book. We could see that also Novo Nordisk is priced higher than the median. Same thing for enterprise value by EBITDA, and same thing for enterprise value divided by sales. And I'm actually not surprised that it's priced higher than the median, because remember, when we looked at the profitability, and I'll go back here, that Novo Nordisk stands out. It beats the median values when it comes to profitability. So why should it then be priced equivalent to the median pharmaceutical firm? You see what I'm saying? So it should be priced higher than the median, and I agree with that. And that is why I'm going to take the earnings per share, which is 22 Danish kroner, and I'm going to multiply that by the top 25% companies, which has a PE of 31, not the median. And I get a value of 703 Danish kroner. So in summary, we have done a discounted cash flow valuation, which gave us a value of 520 Danish kroner per share. And we've done a relative valuation where we compared comparable firms and we got a value of 700 Danish per share. Normally, my strategy is that I only buy shares where I see that both the discounted cash flow valuation and the relative valuation is telling me that the stock is undervalued. In this case, it's not. However, if the stock price falls below the 500 Danish threshold, then I'm intrigued and I might buy some Novo Nordisk shares. The reason is because both then my discounted cash flow valuation and my relative valuation is screaming to me to buy. In addition, I'm going to have the option value at my advantage. Now you're probably wondering about my background. I bring over 15 years of experience from the banking industry, where I've specialized in lending to public firms and deeply understanding their cash flows. Now I'm using that expertise to help you identify undervalued stocks and make smarter investment decisions. On this Patreon platform, I offer you exclusive insights, stock analysis, and strategies to help you become a better investor. Whether you're a beginner or an experienced trader, my content is tailored to suit everyone. If you're serious about understanding the numbers behind the stocks, this is a place for you. You can find the Patreon link in the description below and in my bio. And here's the best part. There is no binding annual fee for my Patreon. You can support me on a monthly basis, which costs around $10 a month. And if you ever feel like it's not for you, you can cancel at any time, hassle-free. It's all about providing value for you as a member in the 50 or nothing community. Now, what do you think about Novo Nordisk? Is the stock presenting a rare buying opportunity, or are the competitive pressures too strong? Let me know in the comment section below. And if you find this analysis helpful, please don't forget to like, subscribe, and hit the notification bell for more deep dive stock analysis. Thank you for watching, and I'll see you in the next one.